You ever notice how billionaires look allergic to paying taxes? Like the second a government waves an invoice their way, they suddenly develop Olympic-level sprinting skills. Except instead of running, they relocate their cash to some sun-soaked island with more banks than people. Offshore accounts sound mysterious, like they're guarded by pirates with gold teeth. But the truth is dumber. It's just rich people opening bank accounts in places where the tax code basically says, yeah, don't worry about it. Meanwhile, you and I get taxed before our paycheck even hits the account. The system doesn't even let us touch our money before shaving off a chunk. But the ultra-wealthy, they're out here moving millions through a web of countries like they're playing Monopoly on cheat mode. You land on pay taxes? Nah, they flipped the board and made up new rules. And the punchline? It's legal. That's what burns the most. If you tried to hide a few $100, the IRS would crawl through your window at 3 a.m. But when billionaires do it with entire fortunes, it's called tax planning. It's not some glitch in the system. The system was literally designed this way. So today, let's tear the curtain off the magic trick. We'll look at offshore accounts, shell companies, trusts, and all the legal voodoo that lets the rich smile while paying next to nothing. By the end, you'll either be furious, depressed, or Googling how much a one-way ticket to the Cayman Islands costs. Offshore accounts get marketed like they're the financial equivalent of a secret VIP lounge. Exclusive, mysterious, probably with leather chairs and whiskey on tap. In reality, they're just bank accounts, but strategically placed in countries where taxes are treated like bad weather, something to avoid, not endure. If you've got the money and the right lawyer, you don't keep it in the US, or Germany where Uncle Sam or his European cousins take a massive bite. You send it on a vacation to the Caymans, Panama, or Switzerland, where the local government basically pats it on the head and says, welcome, please enjoy our 0% tax rate. Here's the trick. It's not about hiding a briefcase of dirty money. Offshore banking is about making clean money invisible. Imagine you earn $10 million in profits. If you leave that sitting in your local bank, you might lose 40% of it to taxes before you can say write-off. But reroute it to an offshore account? Suddenly those profits are lounging on a beach sipping piña coladas and nobody back home gets to touch them. It's not about earning more, it's about keeping more, and the rich are masters at that. And no, offshore accounts aren't illegal. That's the beauty and the rage-inducing part. They're perfectly legal. Governments know they exist. Banks advertise them openly, with buzzwords like asset protection or financial privacy. What they don't say out loud is the real sales pitch. Want to keep your money away from greedy politicians and pesky taxes? We've got you covered. It's a global financial hide-and-seek game where the wealthy are always it, but somehow never get caught. These accounts work because of how international law is stitched together with duct tape and bribes. Country A might say, we tax income earned here. Country B says, we don't tax foreign income. Congratulations, you just found a loophole. Put your profits in B, spend your life in A, and voila, you live large without technically owning taxable income where you reside. Regular folks can't do this because, well, we don't have multi-million-dollar streams of cash to strategically position. Billionaires, though, they shuffle money across borders like they're playing Risk with a cheat code. Think about it. When you get your paycheck, taxes are sliced off before you can blink. You never even see the full number. Offshore accounts flip that script. The rich see the full pile, then decide where to hide it before the taxman notices. It's like being invited to a buffet, loading your plate, and then vanishing through a side door before the waiter brings the bill. Everyone else in the room is stuck paying while you're already home posting beach selfies. And the governments, they tolerate it. Why? Because offshore hubs pump money into their tiny economies, and big nations quietly benefit too. Their own elites play the same game. It's a global gentleman's agreement. You look the other way, I'll look the other way, and the middle class can pick up the tab. Offshore accounts aren't shady little tricks. They're built into the architecture of global finance. They're the invisible wallets that make sure the rich stay rich while the rest of us fund the roads, schools, and hospitals they still use without paying their share. If offshore accounts are the invisible wallets, then shell companies and trusts are the Harry Potter cloak that makes those wallets vanish completely. On paper, they're just legal structures. In practice, they're the rich person's favorite disappearing act. A shell company is basically a company in name only. No employees, no products, sometimes not even an office. Its headquarters might be nothing more than a mailbox in the British Virgin Islands, shared by thousands of other businesses. Imagine showing up to that address. You'd expect a skyscraper buzzing with activity, but what you'd actually find is a sleepy building with one fax machine that hasn't worked since 1998. Yet legally, each one of those mailboxes is a company, and companies have rights. Here's the con. You shift profits into that shell, and now technically those profits don't belong to you anymore. They belong to this empty husk. Governments that want to tax your income run into a wall. Sorry, it's not mine, it's the company's. And if the company just happens to be located in a country with laughably low or zero taxes, even better. The shell doesn't just hide ownership, it relocates the bill to somewhere cheap. It's like telling the waiter to bring your check to a table across the restaurant, then walking out before dessert. Trusts take this game to another level. On paper, a trust is just a way to hold assets for someone else. Think grandma setting aside money for your college fund. Sweet, innocent. But for billionaires, a trust is a stealth bomber. You move assets into it, stocks, property, yachts, and suddenly, legally, you don't own any of it. The trust does. You get to keep enjoying your super yacht, but if the tax authorities ask, you shrug and say, "What yacht? That belongs to the trust." It's a loophole so wide you could sail the damn yacht right through it. And the magic happens when shells and trusts combine. Picture a chain. A shell company in Panama owns shares in a shell in Bermuda, which contributes those shares to a trust in Jersey, which then manages them for your benefit. Each step creates distance between you and your money, until any investigator trying to follow the trail is basically on a global scavenger hunt with half the clues written in invisible ink. The result? By the time authorities figure out who owns what, the money's already moved somewhere else. The best part? It's marketed as totally legitimate. Wealth managers call it succession planning or asset protection. Law firms brag about their expertise in wealth structuring. They make it sound like feng shui for your finances, when in reality, it's just a polite way of saying, we'll make sure you look broke on paper while living like a god. And governments let this happen, because the lawyers drafting these structures are often the same people whispering into politicians' ears when tax codes get written. The Panama Papers and Paradise Papers leaks pulled the curtain back on this circus, showing how celebrities, CEOs, and politicians stash fortunes behind shells and trusts. For a moment, the world gasped. Then everyone shrugged, because deep down we all knew this is the norm for the global elite. These aren't loopholes, they're highways, paved and maintained by the very governments pretending to be shocked when they're exposed. So when you hear shell company, don't picture some sinister underground lair. Picture an empty box with a stack of legal documents that says, I exist and therefore I pay less. And when you hear trust, don't think of family values. Think of billionaires laughing on their yachts while legally declaring themselves poor. That's the cloak, simple, boring on the surface, devastatingly effective in practice. If shell companies and trusts are the cloak, then residency and citizenship tricks are the teleportation spell. Because what's the point of hiding your money offshore if your passport still ties you to a country that taxes you like a vampire at an all-you-can-eat buffet? The rich figured this out ages ago. If the rules are based on where you live, then just live somewhere else. Or at least pretend to. Residency, in tax speak, is not about where you binge-watch Netflix or where your dog actually sleeps. It's a legal definition. Some countries decide you're a resident if you spend 183 days there. Others care about where your center of life is. Your house, your family, your golf club membership. But the wealthy, they treat this like a video game with cheat codes. They get residency in Monaco, where the income tax is basically zero, while their actual lifestyle is spread across London, New York, and Dubai. As long as the paperwork checks out, they win. Citizenship takes the game further. Enter the booming business of citizenship by investment. Pay a few $100,000 to certain Caribbean islands, Malta or Cyprus, and congratulations, you're now a proud citizen of a low-tax paradise. These countries don't just sell passports, they sell escape hatches. With the right passport, your global income suddenly gets taxed less or not at all. It's like buying a golden ticket that says, congratulations, you are now legally less taxable than your neighbors. And then there are tax treaties. Oh, the treaties. These are the fine print deals countries sign with each other to avoid double taxation. Sounds fair, right? You shouldn't pay taxes twice on the same income. Except the wealthy exploit these treaties to make sure they don't pay taxes anywhere. Picture this. Country A says, we won't tax this income because it belongs to Country B. Country B says, we won't tax it either because the treaty says it's Country A's problem. Result, the income floats in limbo, untaxed, while the billionaire pats themselves on the back for efficient planning. Corporations play this game like grandmasters. They pick headquarters in Ireland for the low corporate rate, funnel royalties through the Netherlands because of treaty benefits, and park the profits in Bermuda because Bermuda laughs in the face of taxes. It's called the double Irish with a Dutch sandwich, and no, it's not on the McDonald's menu. It's a tax strategy so effective it saved companies billions, while governments debated whether to call it clever or criminal. The everyday person can't even dream of this. You can't just declare yourself a citizen of Malta because you wired some money. You can't suddenly decide your center of life is in Monaco when your boss expects you at an office in Ohio. But the rich don't just have money, they have mobility. They collect residencies and passports the way kids collect Pokemon cards. Each one unlocks a new way to dodge a tax bill. Governments pretend to fight back by tightening rules, more audits, stricter residency definitions, exit taxes when you move abroad. But let's be honest, those rules are written by the same lobbyists who design the loopholes. It's theater. Politicians give fiery speeches about tax fairness, while quietly maintaining a system where billionaires live everywhere and nowhere at the same time. So the next time someone tells you every citizen has to do their part, remember, for the wealthy, citizenship is optional, residency is flexible, and tax treaties are weapons. They don't just change addresses, they change the very definition of where home is, until taxes become someone else's problem entirely. If offshore accounts are wallets and shell companies are cloaks, then transfer pricing is the scalpel. It's the precise, surgical way corporations carve up profits and stitch them back together in places where taxes are low or non-existent. Forget hiding money in vaults. The real art is moving it through spreadsheets, so complicated they'd make Einstein cry. And the beauty or horror is that it's not only legal, it's encouraged. The global tax system practically begs to be gamed. So what is transfer pricing? In theory, it's just how different parts of the same company charge each other for goods and services. Say you've got a US division that makes iPhones and an Irish division that owns the patents for iPhones. When the US sells one, it has to pay Ireland for using the intellectual property. On paper, that's fair. The Irish unit owns the rights. But here's the trick. Companies set those internal prices however they want. And surprise, surprise, the cost of that intellectual property is astronomically high. Suddenly, the US unit barely makes a profit, while the Irish unit rakes in billions, taxed at Ireland's low corporate rate. Magic. It gets better, or worse depending on your blood pressure. Add another stop in Bermuda, where the intellectual property technically lives. Now the Irish division sends most of its profits to Bermuda as royalty payments. Ireland collects a little tax, the US collects almost nothing, and Bermuda collects, well, nothing, because it doesn't tax corporate income at all. This three-step shuffle is the infamous double Irish with a Dutch sandwich. It sounds like lunch, but it's really a tax scheme that saved companies like Google billions. Billions that could have gone to public schools, roads, or hospitals. But hey, at least shareholders got another yacht out of it. And then there's interest payments, the cousin of transfer pricing. Imagine a corporation sets up a financing arm in Luxembourg. That entity lends money to the US division at ridiculous interest rates. The US unit now pays massive interest expenses, which are tax-deductible. Translation: profits shrink in the US, tax bills collapse, and those interest payments float over to Luxembourg, where, thanks to sweetheart deals, they get barely taxed at all. It's like loaning money to yourself and then crying poor to the IRS. And the best part? Totally legal. The scale of this is mind-bending. We're not talking millions, we're talking hundreds of billions shifted each year. Corporations route profits like global airlines, New York, Dublin, Amsterdam, Bermuda. And just like airlines, they do it with precision timing and a clear destination anywhere but the tax collector's hands. Entire teams of accountants exist solely to engineer these flows, with spreadsheets so thick they need their own server farm. Of course, governments try to fight back. The OECD, that's the club of rich countries, has been banging its head against the wall with initiatives like BEPS, base erosion and profit shifting. They make noise about minimum tax rates and transparency. But every time they close one loophole, accountants invent two more. It's financial whack-a-mole, except the moles are armed with PhDs in tax law and million-dollar retainers. For regular people, this is infuriating. You buy a coffee, you pay sales tax, you get a paycheck, taxes come out automatically. You don't get to negotiate your internal transfer prices for your labor. Imagine telling your boss, actually my time today belongs to my shell company in Bermuda, so my taxable income is zero. You'd get laughed out of the building. But for corporations, that's business as usual. Transfer pricing and interest games don't just save the wealthy money, they reshape entire economies. Countries bend over backward to attract these profits with low rates, becoming havens for cash but offering little accountability. Meanwhile, the rest of the world foots the bill. Roads crumble, healthcare struggles, education budgets get slashed. But hey, the quarterly earnings report looks fantastic. So the next time a corporation brags about global efficiency or maximizing shareholder value, translate that in your head. We built a labyrinth where profits run away from taxes faster than you can say Cayman Islands. It's not innovation, it's tax teleportation. At this point, you might think billionaires are masterminds, drawing charts at midnight and outsmarting governments with sheer genius. Wrong. Most of them wouldn't know a tax treaty from a Taco Bell menu. The real architects of this circus are the professionals, the lawyers, accountants, private bankers, and even algorithms that operate like a shadow army. These people don't just find loopholes, they manufacture them. Entire law firms exist solely to draft structures that turn taxable profit into a ghost story. Picture it, a boardroom full of suits, sipping overpriced coffee, running simulations of how to move profits through 5 jurisdictions in under 10 seconds. They've got teams of PhDs who treat the tax code like a Sudoku puzzle, filling in blanks until everything lines up with zeros owed. Banks play along because holding offshore wealth is big business. They don't just open accounts, they provide concierge services, investment vehicles, even entire fake companies prepackaged and ready to own your assets. If offshore accounts are the car, banks are the Uber drivers chauffeuring the money around the globe. And then there's tech. Algorithms now crawl through thousands of pages of international law, analyzing treaties in milliseconds to recommend the cheapest possible tax route. Think of it as Google Maps for avoiding taxes, fastest route to zero liability, rerouting through Luxembourg, estimated savings, $80 million. With automation, what once took teams of experts weeks can now be executed in days. The system isn't just broken, it's industrialized. Meanwhile, the wealthy themselves are mostly passengers. They sign documents, nod in meetings, and then brag about being smart with money, while the real genius sits behind a laptop billing them $2,000 an hour. It's like a celebrity chef taking credit for a meal they didn't cook. The lawyers and bankers are the chefs, and the billionaires are just the customers licking the plate. This professionalization also makes it impossible to stop. Regulators are outnumbered and underpaid. One tax inspector might be responsible for reviewing hundreds of cases, while the other side fields an army of specialists whose entire career revolves around keeping wealth untouchable. It's not a fair fight, it's a mugging, except the mugger has a law degree and the victim is the public treasury. So let's be crystal clear. Tax avoidance on this scale isn't about one genius billionaire finding a trick. It's about a system of highly paid professionals who build cloaks, design mazes, and optimize every angle until the government gets nothing. The rich don't need to outthink the system. They hire people who wrote the damn system. So here's the uncomfortable truth. The rich don't cheat taxes. They redesign the game so the word cheat doesn't even apply. They use offshore accounts as wallets, shell companies as cloaks, trusts as stealth bombers, residency tricks as teleporters, and transfer pricing as scalpels. And then they unleash armies of lawyers and bankers to orchestrate it all like a symphony of avoidance. The result? Governments starve while yachts get bigger. And ordinary people wonder why their kids' school can't afford new textbooks. We pretend this is a glitch, but it's not. The system was built this way, on purpose. Politicians rant about fairness, then quietly sign treaties that let corporations funnel billions away. Regulators chase leaks like the Panama Papers, only to watch the money vanish into new havens before the ink dries. It's not incompetence, it's collaboration. Everyone in power knows the game, and most of them are players. And where does that leave us? Paying. Always paying. Your paycheck bleeds before you even see it. Your groceries are taxed at the register. You don't get offshore options, second passports, or custom trusts. You get a W-2 form and a headache. And every time you hear about a billionaire paying almost nothing, you're reminded this isn't a meritocracy. It's a rigged casino. The house always wins, because the house wrote the rules. But here's the kicker. Awareness is contagious. Every leak, every headline, every breakdown like this chips away at the illusion of fairness. The more people understand the scam, the harder it becomes to justify. Pressure builds. And while the system won't crumble overnight, cracks form when enough people stop shrugging and start demanding answers. So here's my challenge to you. Don't just get mad. Comment below what part of this circus shocked you the most. Was it the shell companies, the residency games, the Dutch sandwich, or was it the fact that it's all technically legal? Drop your take, because the more noise we make, the harder it is for them to ignore it. And remember this, the rich aren't magicians. Their tricks only work because the curtain stays closed. So keep pulling it back, keep asking questions, keep spreading the word, because the day the audience stops clapping, the magic show ends.